Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro, where we give you stock picks and live stock market analysis every day. I want to thank you for joining me. It's 7:30 in the morning. Shows how badly you want to be successful. We got a lot to talk about today. Just when you thought the market was ready to fall off a cliff about a week and a half ago, everything reversed. Tech stocks, tech leaders, probably started by Apple stock about a week ago when they reported record earnings, followed up by Alphabet yesterday, launching us well past what was expected to be resistance. And today the futures are up again today. So stock futures are, as of right now, up 38 points. It's 7:30 in the morning. We have a ton of stuff to talk about today. We got a bunch of stock picks. We got sector rotation. I'm going to give you a little bit more insight into my trading software today and how to scan for the top stocks at the right moment. We're going to talk about where the short sellers are in trouble if they did not get out of those shorts. We came into the week looking for Monday to rally, Tuesday to rally, and then selling coming back into the market on Wednesday. We've exceeded the level, which I'll show you in a second, where we expected the short-term rally, which was mostly called short covering up to that point, went slightly through that level this morning. Now today, we're going to actually walk you through how to read the tape on the short-term basis, because right now I am sure if you're buying and selling stocks that your head is spinning right now, because just a week ago we were in confirmed bear market territory. So this is the difference between scripting out your trading success and just reacting to price and having your head on a swivel and feeling like you lost all of your knowledge for trading. We got a good show for you today, so stick around. We're going to be back in just 1 second. Okay, so thank you so much for being here with me today. It means a lot to me. For everything we talk about here today, it's informational purposes only. Obviously, it's up to you to make that final decision. I guess the first thing we're going to do is we're going to hop on over into look at some pictures, which are pretty amazing. This is the sea of green that the market traded into over the last week or so. What's super interesting is the tech area is still up near the top here, and yeah, it's just kind of common knowledge as interest rates are expected to rally, which they're now talking about March. They're talking about maybe they don't need to raise as much as originally thought. They're thinking that inflation might not be as bad as they expected. I don't know how they're coming out with that. It's at 40-year levels. But tech stocks should not be rallying when interest rates are perceived to go up. But these big cap tech names, Google specifically, we'll take a look at that in a second. We're going to take a look at PayPal also on the other side of the market and PayPal earnings. So let's actually start out with, yeah, exactly, Frank. Tech is back. Not a question. Raise your hand if right now the stock market and any stocks that you're buying right now, you just don't have that same conviction that you had maybe even 4 or 5 weeks ago. It's pretty interesting right now, and this is where you're going to separate yourself from all of those people that say trading doesn't work, it's impossible, from you, who is with me right now at 7:30 in the morning, who is doing the extra work. One thing we've been spending a lot of time on right now is if you're in the stock market and you're doing your own stock picking, you're an active trader, you need to do just that little bit of extra game planning to determine, is it great conditions and what the right position size is for you. So let's work on over and let's work on over and we'll take a look at what I was talking about as far as the market actually rallying and the level that we were looking for it to hold. So you can see obviously over here, the SPY is actually up. Here's the big thing that I want to walk through. And obviously we're still in a bearish trend here. What we'd like to do is keep things as simple as possible. And right there, this level right here, the 50% level, which ironically, if you're a subscriber to our channel every day, which by the way, thank you so much if you are, the opening price for the week is really the big level, but we're going to talk about the opening price for the week today and the opening price for the day and how the opening price yesterday alerted us to a lot of opportunity coming into today, which is Wednesday. But the big thing I want to talk about is, ironically, the 50% level is usually what I set for my initial profit target as stocks rally. If they pull back and start to rally back up, that 50% level is my initial target. Then we kind of shift over into what we call profit maximizer, looking for a bigger move beyond that. And that we've actually gotten to that level in the SPY. So I just want to point that out. The opening price for yesterday and the 50% level are actually at the same price. And now we're actually exceeding that right now. So I just want to show you that on the chart right now. So whenever you're using a simple Fibonacci retracement, you start any trend. And I just want to be clear on this because you get this question a lot. Can you use Fibonacci retracements on any time frame? You absolutely can. Really, all you're looking for is a significant trend that you want to measure. And to put Fibonacci in the way that I do it, the most simple way is I'm just looking at how strong is the previous trend that I'm measuring. So if we get a big push to the upside, I want to know, okay, here's the size of the move. How deep does it pull back? So the less deep or the less it pulls back, the stronger the previous trend. So that I want to tie that back into what we're looking at over here in the SPY. So generally speaking, this 50% level would be a level. But if this level right here is all that we pulled back from the lows, we'd actually still expect it to push down, which if you remember, Monday, we actually did expect to hold that level and roll over to the downside. But this is what we talked about. Remember we said on Monday and yesterday morning, we said we have game plans for both sides of the market. One of them was a little bit more aggressive trade, which is the most recent price action to the downside. If they held the offer, which means that sellers stayed there and we started to push down again in the context of the last 5 weeks worth of selling, then I'd be aggressively short selling. And if we actually did not push down, held that level and kind of rallied above it, which is actually what we have so far this week, then I'd be trading for cash flow to the upside. So I just want to give you that picture again, and I want to come back and I want to walk you through how to set your position sizing. Okay, so again, this is what we're talking about here in the SPY. Push down, we were looking for this level to hold, and it didn't. It did not push down. This level right here, we were looking for that to be the next line in the sand. Again, here on Monday, you can see we traded through there. It did not push down. So what we talked about coming into the week was hedging ideas, hedging positions, and understanding the difference between what would dictate me increasing my position size and the amount of trades I had and where I'd be looking to hold those trades longer. Remember what we talked about yesterday. It's not your trading losses that are hurting you. It's your trading wins that are hurting you. It simply means that you don't understand the right type of profit targets and the right share size in the right market conditions. So I think Min Vai's on the call right now. We have to talk about situational analysis. So right now, even as of 4 days ago, the market was in a confirmed bearish territory. Even the SPY was pummeled through that big level that everybody's watching. And I'll put that up on the screen. Again, this is really important stuff, okay? So right there, you can see that it was well below for a week, below that 200 period moving average. So the situational analysis, the proper trading size, you'd be looking for it to get followed through to the downside, especially with the picture of interest rates going up, inflation, asset bubbles, all of those kind of things, right? So the right trade, the right game plan was to look for short sales. You could either buy inverse ETFs if that's what you like to do. I like to personally short sell stocks, and I would have been looking for the short sale. So coming into the week, we were game planning heavy on the short side if we get follow through, cash flow trades on the long side as a buyer if we don't get follow through and we start to rally, and if earnings come out better than expected. Well, that's exactly what we got. So my trades this week, I had some short sales that I covered, got in and out, maybe a little profit, a little bit of a loss, and then anything to the long side. We'll get into the energy stocks in a second, right after we talk about Google and PayPal. Anything to the long side for me right now is more of a cash flow trade. So cash flow means a little bit less shares on my initial entry, looking to build into a position as I get confirmation, as we get proof from the market that we get follow through. So I can't express this strongly enough. Again, we talked about this yesterday, and we got a lot of really nice feedback. If your account is going like this back and forth and you can't get any traction, you're not seeing it go like this day after day, week after week, let's even say month after month, week after week might even be a little bit too short. If your account is going like this and you're not gaining traction, it simply means that you need to do just a little bit of a better job. What we just discussed, which is understanding the conditions that you're in right now and what is the proper profit target and position size for that condition. I was thinking about this last night. I really wanted to say this in a way that would really be impactful to you. And it really comes down to, if every stock market situation looks the same to you, you don't have an edge. So what that simply means is there needs to be, when you're looking at stock market and you're looking to make stock picks, you need to determine how strong is my conviction level. So I'm going to give you an example. And this is from a comment from yesterday. And again, I love the comments. If you have any comments, please leave them below the video. Okay. Somebody yesterday commented to me that Intel is a great buying opportunity. That is not a great buying opportunity. There's no way in the world that's a great buying opportunity. The stock has been heavy, broke support, and massive selling with bearish gaps to the downside. If you are qualifying that right now as a great opportunity to buy, you simply do not have a trading edge. There's nothing in that scene right now other than maybe 1 or 2 days worth of price action that rallied with the rest of the market. This stock is in bearish territory. So if everything looks the same to you, if you can't make a distinction between when should your position size be up here, when should your profit targets be way up here, and hold for longer entries and longer profit targets versus, you know what, I'm going to trade the most recent momentum, which is well bid, well bid, well bid, well offered, and then you're out. You're just booking that profit right away. You need to make a distinction between amazing and then you work your way away from amazing, and that's going to lower your initial conviction size and probably your profit targets. What does that mean? Maybe you're trading for 2-to-1 profits versus 3-to-1. Maybe you're looking to add when it gets up to that level versus you're looking to get out. These are the things that I passionately talk about every day in our community, and I hope you're writing this stuff down as we talk about it. All right. So that's one part of the equation today. So now we actually have Google earnings came out, right? Just absolutely blew the doors off of what was expected, right? Affable reports, big fourth quarter beat. The stock pops. We were actually up 10% last night. Now, we got a bunch of questions last night about, well, they were kind of okay compared to, it's what's expected. That is how earnings rally or decline. It's what was expected by the analysts, and then the number came out compared to what it was expected this quarter compared to last quarter and compared to last year. It's the expectation. It's not the raw number. We are not in the same circumstances that the world was in a year ago. They are comparing it to what was expected now with the current market conditions, the current climate, the current interest rate climate. The expectations for right now blew the doors off. That's a big mistake that I see people make. Well, it just was better than last year. That's not enough. What was expected now? Okay, so Google, amazing. We're going to look for follow through and amazing today. Also, I don't know if you saw that, which I'm sure you did, the 20-to-1 stock split for Google, which is a really big part of the equation. I don't know if that was actually in here. Gosh, where the heck is it? If you didn't happen to see it, they came out with a 20-to-1 stock split announcement as well yesterday. So just absolutely amazing. Now, the other side of the equation, we're going to take a look at the stock, is PayPal did not. PayPal got absolutely crushed and actually trading down. So let's actually take a look at PayPal first. Let's actually go over there and take a look at where we are over here. So PayPal is continuing to be in bearish order flow. And again, if we take this into consideration for what we're talking about before with somebody saying that Intel is a great opportunity, when a stock has bearish order flow and it's continuing to push to the downside, and you're saying push down and a pause, a push down and a pause, there's no reason to have massive conviction. Now, we've talked a lot recently about some stocks that were pushing down, rallied, broke the bearish order flow. And if it's the start of a new trend, it's starter position. We had that in Roku a while back. We had that in Tilray stock a while back. Small positions that didn't follow through, took a small profit, small loss, no big deal. If they followed through, then we'd look to add. PayPal has no signs of moving to the upside, and there's no reason in the world to be trying to bottom fish this thing. But if we go to the other side and we take a look at Google, and we'll jump over here again and see where it is, it's up $295. Now, let's talk about position sizing in Google right now compared to where it was coming into where it's trading right now, because I want to tie this all back. I'm getting a ton of feedback right now on people that their heads are spinning. I don't understand. One day the market's getting crushed. 2 weeks later, the market's rallying. What am I supposed to do? First of all, if it doesn't make sense to you, stay in cash. You don't have to trade. If it doesn't make sense, preserve your capital until what it looks like on the screen matches the way you look at the market. However, I want to walk you through something that we sent out to our community today, which is about reading the tape. Reading the tape is incredibly, incredibly important. I just want to find that email. Here it is. And I want to share this on the screen right now because it's kind of important. All right. And I'm going to actually make this a little bit bigger for you so that you can read it. A confirmed bear market decline has quickly reversed back into bullish territory. Now, I think the quickly part is what's got a lot of people messed up right now. Okay. If your head is spinning, you're not alone, which actually, again, speaking to you as a trading coach, a trading mentor, I just want to say this right now. There's been many times in my trading career where I literally would say to myself, I couldn't hit water if I fell out of a boat. Sometimes I've had that bad of a read on the market, whether it's a bad day, a tough market, I'm just not trading well. It doesn't mean I forgot how to trade. It means that I'm not paying attention to results and I need to scale back until I have a better read on the market. So if you're finding the market tough right now, scale back or be in cash. Go golfing. Go have the most expensive dinner you could possibly have. It'll be cheaper than trying to trade when you're not in a groove. I just can't express that strongly enough. Okay, so I want to finish this up because I think it's important. All right. Sector rotation typically lasts for months. Last 18 months have witnessed incredible changes in sentiment that has literally unfolded by the hour. And, again, we talk about this screen every day. We walk you through it. I'm going to walk through. This is now sorted by interval of yesterday's open, and we're looking for pockets of opportunity of stocks that closed with the largest green candlesticks yesterday. So I want to be very clear about what I just showed you on the screen. Those numbers were not percentage change from yesterday's close. Those numbers, and this is a proprietary scan that I had built in TradeStation. This is a percentage change from the opening price, which means that is showing me a list of candles that have the largest green candle from yesterday. That's irrespective of the longer term order flow. What I'm looking for is short-term relative strength that I can at least put in my game plan to look for cash flow trades today. So again, we're mixing longer time frame order flow, buying over time with how stocks performed yesterday. After I build that list of stocks that had good relative strength with the largest percentage moves from yesterday's opening price, which means the larger green candle, then I go to the stocks and I see where they are in order flow perspective. Okay, so I want to finish up with what I just talked about there. I want to show you that screen again, just to give you an idea. So these percentages are from the opening price from yesterday, not the previous day's close. Okay, so I just want to finish up here. Opportunity, what was a sea of red only a week ago has turned into a green ocean. Opportunities in today's stock market are simply incredible if you can read the tape. Spotting the flow is one thing. Tape reading is what's creating massive chances to generate cash flow. Now, what does that look like? Well, this is the list of stocks. Now, again, you might want to take a snapshot of this. Now, what I'm about to show you is a part of that, the game plan that I just showed you of all those stocks that met the criteria from yesterday. This meets more criteria. This list of stocks might not necessarily be trades today, but if you could imagine it kind of like as a gauge where I run a scan, a proprietary scan every night that tells me which stocks meet the perfect order flow for the last month, the last week, yesterday, and change from the open. So it has to meet 4 different criteria. Just 2 or 3 days ago, this list was 4 stocks. 4. Today, again, this is getting back into, I want you to maintain your confidence. Today, the list has 41. 41 stocks. And you can see that they're in different sectors. Energy obviously is dominating the group here, and financials are starting to work their way up the list. And you can see the percentages over the last week and over the last month. So what does that tell you? That tells you that right now, in this moment, the list of ideas on the bullish side of the market is growing, and we could have a little bit more conviction. We'd be shifting from just simply cash flow to maybe looking for more feedback to buy some stocks and hang on to them a little bit longer. So we initiated swing trades this week in the financials specifically because we've been watching them as the conversation around interest rates. I also want to take this a step further, which we've been talking about quite a bit. And I'm going to zoom this in for you because this is a really advanced and something you need to know, okay? When you start to look at a list like this, it's incredibly important. Obviously, which stocks are important, but this is what's even more important. You want to start to go and look in areas that are a mass amount of money going into that. So energy, as we've been pointing out to everybody, we've been watching energy, and you can see the energy stocks and their percentage gains over the last period of time. What I just showed you and what we're talking about from a sector rotation perspective means everything. So if we go back to what we just talked about before and we go here, typically last month's, right now it's going by the hour, literally by the hour. So when we're looking at new opportunities to buy, new stocks to buy, new stocks to sell, and I'm going to get into a whole big list for you in a second. Hopefully you took a snapshot of that, right? The key right now is to understand expectations for follow through. We are absolutely not in a clear ripping uptrend to the upside right now. So that list of stocks that I showed you, those are cash flow trades to me that are now in my software to look for ideas after the market opens today through the rest of the week. We have exceeded the 50% level, exceeded where I thought we were going to rally to before we rolled over again. Now, is that changing my mind? No, it's paying attention. So remember, the biggest thing that we talk about here are two main criteria that profitable long-term traders need to understand. Number one is order flow. Is the bias obvious that buyers or sellers are clearly in charge? That's the first thing. Pick a side, then pick a spot. Pick a spot is the second part, which is tape reading. Tape reading is where a lot of people are getting their head beat in right now because you're not saying that's the price that needs to hold. If that price holds, then I'm okay with being a buyer. If that price does not hold, then I'm simply not going to put a trade on because it's not matching what I planned to do. Remember, we talk about this every day. If this happens, then I plan to do this. Here's where you get in trouble. If this happens and it doesn't, so in other words, if this is what you expect to happen and it does not happen and you still place the trade anyway, shame on you. And that's why you're not succeeding as a trader, because you are not paying attention. I'm very honest about this. When I first started trading, the first year of trading, the biggest mistake I made is I wasn't paying attention, number one, to the results that I was getting and how those results were being affected by my analysis, my tape reading, my order flow analysis. If you want to instantly change your trading right now, have the guts to script out what you think is going to happen for the day, the week, and the month. If it does, trade with conviction. If it doesn't, have the guts to get rid of fear of missing out and reevaluate your next idea. What I just gave you is the secret to long-term trading, and that's nothing to do with the market. It has to do with here. You did the work. 7:30 in the morning, 8 o'clock in the morning now, you're here. You have the desire to make money from the market, whether it's part-time or full-time. You need to know that the only way that's going to happen for you is to trust what you know. And again, if you're not getting the results, there's a gap between where you are right now, and that's probably because you're trying to be a better chart reader. Screw being a better chart reader. You did not open a trading account to be a better chart reader. You opened a trading account to make money. When you understand the difference between the two, you will start to pay attention and say, if this is what I expect to have happen, and it does, then you take action with conviction. If what you expect to have happen does not happen, and you take action anyway on that, that is why you're struggling. So if I give you anything from all of this knowledge that I have in my 21 years of trading, number one, have confidence in yourself. Learn to develop an edge and have confidence in that. Script out what you plan to do. Now, we're going to tie that into Google right now and the quality of the idea after earnings, because there was a certain bearish order flow heading into earnings, and it was not, quite frankly, in an uptrend. Maybe the last couple of days, but only in a couple of moments. So I want to go back over to that chart, and I want to pull it up, and we're going to tie it into this. So Google earnings, amazing, right? The stock is popping right now. It was up 10% last night. If we go over to the chart and we just have raw technical analysis, that's where we were since January started. And if we could take it even further, we actually had what is known as, kind of a double top. And then we actually had a little bit of selling before it actually plummeted with the rest of the market. You can see it's actually still up 10%. So now let's talk trading in the real world. Okay. Let's not talk what you could have done, should have done, would have, none of that matters. Let's talk real, where your account actually is involved in the trade. Okay. Google, most of the tech stocks have been in bearish order flow for 2022. The stock market went into a bearish correction. Now, like a lot of the other stocks that we've been paying attention to over the last week, ATVI with the big news with Microsoft, Kohl's, KSS with that big gap up on the activist investor getting involved, and yesterday with UPS earnings, we were super clear that these stocks did not have ripping bullish order flow prior to that, and you needed to read the tape on a different time frame. And now we're going to do the same thing because Google did not have bullish order flow heading into yesterday's earnings, which means right now it's a cash flow trade until we see the buyers step up, hold the bid, pay higher prices, and then we could join them and have conviction. So today, for me, Google, where it opens and where it trades, and this is tape reading, where it opens and whether it trades above or below that, and I'm going to show you ATVI. This is a perfect example last week. This is the line in the sand. So coming into last night's earnings, I was not long because, quite frankly, it was a bear flag. It was actually still push down and pause, push down and pause, push down and pause. That's bearish activity. Because of that bearish activity, I was not long heavy. Now we're up at 30, 32. So we're kind of like up in this area over here, right there. So what are we talking about? This is what we're talking about. This is the exact price action that you need to use as your map. Remember, everything that we've been talking about this week is you need a roadmap. Everything in the market can't look the same to you. If it looks the same, you do not have an edge. However, once you have that edge, everything changes because now you're not lost anymore. If you know what you're looking for, you're never going to be lost in the market again. My edge is order flow, tape reading, risk reversal. It's pretty simple. It's only 3 things. But whatever you decide to use, you need to differentiate between awesome, let's go, to, oh no, last week it was bearish, today's up, what do I do? So here's the map. It's the perfect map right now for what happened this morning. Right here, ATVI, monster move to the upside. You can see the pennant that we drew. So we said when this came out, it needs to hold this level in order for us to buy and get long with follow through. It has not. So what did we do in ATVI? Nothing. There was nothing to do. But remember, if this happens, then I plan to do this. That didn't happen, so I didn't do anything. Now we'll shift over into UPS from yesterday. Pretty big move to the upside after earnings. Same exact thing. We had that line in the sand and we got some follow through. So we're looking for follow through. So as long as it stayed above that level from yesterday and the rest of the week, we're going to be looking to continue to be a buyer as long as the smart money is doing something obvious that matches what we're looking to see. If this stock trades below where it gapped yesterday, I'm not going to fight it. They have deeper pockets than all of us. If they are taking profits, I'm going to take a step back and then I'm going to look over and lean into some other ideas that make sense today. Does everybody understand that? If it's hard to find, it's not there, but you need to first know what exactly it needs to look like. So we just gave you the map for buying Google stock today that I plan on using. And it's the same map that we just looked at UPS and Kohl's from last week and ATVI. I hope you take that to heart because once you understand price action needs to fit your criteria, everything changes because you're no longer saying, I don't understand. I don't understand. All you're saying now is that's what I was looking for and it's happening. Great. Or that's what I was looking for and it's not. Okay, I'm going to go have a cup of coffee because what I was looking for is not happening and I'm not throwing money away because I'm bored. That's where you lose most of the money. You're bored and you overtrade, or number 2, you don't understand great conditions to hang on to winning trades. It's the winning trades that are holding you back. assuming you have discipline when stuff doesn't work out. All right, let's start getting into some ideas, and we'll take a look at some more ideas on the daily charts for today. Some of the bigger picture stuff that is in my game plan today. Obviously, a ton of energy stocks followed through yesterday. Exxon reported yesterday, probably the day trade of the day yesterday, which I'm super pissed off about. I did not capture, which is right there. This optimal entry leading to a much bigger move. We actually did have some members of our community yesterday who caught it. I didn't. I was focused on a couple of other ones. Specifically, we had DVN yesterday on our radar as looking for it to open lower, which it did and rallied. So this was one of our better day trades. So we're actually looking for DVN, and we are looking for FANG, and we are looking for Chevron to follow through today. Some other ideas, we're looking for cash flow trades in Apple today. You can see it paused beautifully, looking for it to retest this level up here. Lockheed Martin, a little bit more of an expensive stock, actually pausing now for 3 or 4 days right in front of this breakout level. Also looking at Dow yesterday. We mentioned this one quite a bit. Finally got through the level. This is, and one thing I want to point out as well, hopefully you're starting to do this because we're talking about it on a daily basis. There's your trading game plan, which are stocks you plan to trade today and this week. And then you have your tracking journal. Tracking journal are stocks that need to meet certain criteria, like DOW. We had an alert set for 60, finally punched through 60, and now it's going to be in our game plan. So it went from tracking journal, which means watch it and set alerts, to trading game plan for ideas that we're looking at today. I want to just put something on the screen again before. I want to give you a chance to take a snapshot of this. The list of stocks in my custom platform that met the criteria for solid relative pushes from yesterday's opening price. Remember, we're talking about the opening price and the push off the opening price and maintaining that. So smart money had a lot of attention on these stocks yesterday and held that attention the whole day. And isn't that really what we're looking for? We're looking to piggyback when the smart money is doing something obvious. So I want to put that on the screen again for you just for 1 second so you could take a snapshot of it. That's this list here. And you can see this is smart money from yesterday's opening price. And you start to look at some of these stocks that had large percentage moves yesterday, which means those are large green candles from yesterday. Quite a few. Sava actually got up to that $50 level yesterday. That was a big one right there. And you can see, actually, John before talked about BROS, which was actually pretty good follow through yesterday. John A brought that out one before. BROS showing some nice order flow as well. A couple of other stocks that have actually paused setting up ideas to the upside. CF, we just showed you, right? That one actually had a really nice clean pause and finally got out of there. IBM, we've been talking up IBM for about a week now and looking for it to get out of this 3-day trading range. Finally did yesterday. If you remember, I want to say if it wasn't Monday, it was Friday. We talked about IBM being a 2-step trade. So again, I'm walking you through position sizing. I love the idea. I like to follow through after earnings, but it's got a big wall up here where sellers came in the last time and pushed it down. So the first piece was the breakout from yesterday. The second piece would be above that level. We're looking for feedback before we increase our position size. Remember, that's just smart trading. All right. So there's the first, finally got out of this 3-day range. Now we need to get above here in a much bigger way. Some other stocks that are in the list. We just showed you DOW, PM. Actually, remember, we've had this alert set in PM now for probably about 2 weeks, above 104. You can see we're actually 103 and change. Interestingly, on the other side of the market, MOS. And if you remember, we talked about, FIS. And I just want to also, this is also give you an idea how we work the charts here. Bearish order flow, broke the trend, went into another box, broke the trend again. Now, here's the challenge here. This was the optimal entry here, 108 to 121, $13. So what am I looking to do in FIS right now? It's already gone beyond its optimal entry. So today would be what I would call a bullish echo in FIS. I'd be looking to day trade it one more day because I'm looking for that follow through, because if this is the normal move, right, we call it average true move, and it's already used up, let's say 80% of the average true move. Today would be a bullish echo for a day trade. Then I'm looking for it to pause, and then I'm looking for the next push. So remember, something we talk about a lot is we manage risk on the pause. We make money on the push. FIS now has pushed a pretty good distance over the last week, and you can actually see the optimal entry here. So what I'm looking to do now is one more day to the upside. Then I'm looking for a pause, and then I'm looking for the next move, push through. Actually, on the other side of the market, for those of you that might be short sellers, and actually John keeps talking about DKNG, so we'll push that one in for him. Two short sales on the healthcare side of things. EW, Edwards Life Sciences, and Pfizer. Both of those, I'm looking to see them roll over. So we're actually now hedging the other side of the market, looking for trades on the long side, at the same time working positions on the short side in stocks that are showing relative weakness while the market's going up. So I'm just going to point that one out for you right here. So Pfizer, you can see Pfizer still stuck in this bearish order flow, and Edwards Life, EW, Edward Life Sciences, actually rallied and traded into what we call yesterday a bearish U-turn. Now, I want to point this out. When you get swing trading ideas, you get pushes and then you get reversals. So reversal, what we're seeing on the chart in EW is a bearish U-turn. If you're looking to short as a swing trade, a bearish U-turn, you need to take out that low. So remember, if this happens, then I plan to do this. Right now, the stock is trading higher. So I'm not just going to short it because I put it in my game plan. It needs to meet that criteria of yesterday's candlestick, which it didn't do right now. So we're going to let that one go. So remember, if this happens, then I plan to do this. All right. Some other stocks on the long side. We obviously talked about some of the other energy stocks, COP, BLO, and John there talking about BROS as well as DKNG. If you remember last week, we talked about AFRM, and we also talked about UPST. Now, these stocks, if you remember, we talked very, very, very clearly about if you have a bearish move to the downside and you see the first sign of a reversal to the upside. Now, we saw this in Roku a little bit earlier last year. We saw it in Tilray, TLRY. We recognized bearish moves to the downside. We recognized the first push to the upside. That meant that first reversal is first position size. So again, we talked about it yesterday. If I want 1,000 shares and it's the first sign of a reversal, I would probably go in with 200 or 300 shares to put it in my position summary and then read the tape as the stock is unfolding on that side. So Google. Bearish order flow coming into today or coming into yesterday afternoon. Today would be a cash flow trade. I gave you the map. Same thing that we did in ATVI. Same thing that we did in KSS. Same thing that we did in UPS yesterday. Massive move to the upside. Now you need to read the tape after the market opens. And as long as it's above that level, we have conviction. They're holding the bid. Best case scenario, they're paying higher prices. Going to lean on the energy stocks, going to lean on the financial stocks today, and looking for some follow through. Metaverse reports are scheduled to report after the close today. There's a lot of things going on right now. I just can't express this strongly enough. If you feel like your head's spinning right now, just take some time to understand order flow and tape reading before you start to scale up and take a little bit more risk. I'm telling you, there is amazing opportunity in this market right now. You just need a roadmap. I hope I'm giving you my roadmap. I hope that I'm at least pointing you in a direction to understand that when you have a structure, you're never lost. It's only when you don't have that structure that the market feels like it's all over the place. One of the most proud moments that I could have as a mentor is when somebody comes to me and they say, I don't see anything. And what does that mean? That means they know exactly what they're looking for. And if it doesn't match what they're looking for, it's time to go get a cup of coffee and save that money. However, like I said before, if what you game plan is happening, trade with conviction and learn how to make more in your winners, because it's your winners that are holding you back, not your losses. If you have discipline getting out of trades that don't work, it means number one, you got to stop that. Number two, the other side is discipline on the good ones. You cannot cut your profit short if you did all of that work and you got them. You got that, it's right there. You can see it moving and you book that quick profit. You need discipline on the winning trades as well. I have to get ready for our other call right now, everybody. I want to thank you so much for joining me. If you get some value out of these videos, please do me a favor, smash that subscribe button so you get updates and hit that like button. It would mean the world to me. I'd really appreciate it. Have an awesome day, everybody. I will speak to you soon. See you tomorrow morning, 7:30. Take care now.